Value Investors Club. I'm your host, Juma Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best value investors out there. Today we have WOLFSPEED Inc. Ticker is WOLF, WOLF. Price at the point of filing is $90.40. Please write down in the comments below if you have invested, will invest, or have not, and why into this company. Description: Executive summary, investment thesis. Dominant market share in oligopolistic silicon carbide SiC market that is superior to silicon for advanced semiconductors in markets like EVs, 5G, etc. Company is at inflection point as their capex spend nears its end and capacity greatly expand to meet the overwhelming market demand. Backdoor EV play and beneficiary of CHIPS Act to bring semi-manufacturing back to US. CapEx for additional fabs to accommodate demand and lower costs. Steady state should be high growth, high margin, and profitable. Strong management team. Large and growing backlog. Strong visibility. Around 6 billion plus in design ins for FY 2022. Everything in dollars. Growth potential beyond EVs is significant. 5G, solar, etc. as chips transition to SiC from silicon. Opportunity exists due to near-term headwinds that should abate and expose huge opportunity. Stock doesn't appear cheap today, but the company is spending on capex ahead of strong and growing demand. Oligopolistic market leaders are rarely cheap, but this is an opportunity to accumulate shares before the market fully appreciates the upside potential. The top line of Wolf should outpace the growth rate of the underlying EV production, which, in combination with the company's strong margin trajectory, given its vertical integration and increasing volume, will drive an even stronger earnings growth ramp. As the company fills the expanded capacity, it should be able to achieve over $6 billion in revenue and over $10 per share in EPS, setting it up for sizable gains. Recent news: in the process of writing this investment idea, two pieces of material information, both very bullish, were announced. A. On 11th 16 2022, Wolf announced a multi-year deal with auto and mobility supplier Borg Warner to allow the company to invest $500 million in Wolf's financing in exchange for the SiC device capacity. The agreement allows Borg Warner to purchase up to $650 million a year of devices. B. Dollars, of course. B. On 11/17/2022, Wolf announced the pricing of $1.5 billion convert that should help finance the growth plan and reduce the risk of capital markets closing. Corporate overview. Wolf, formerly Cree, has completely transformed itself from an LED manufacturer to the largest silicon carbide SiC manufacturer in the world. In 2021, the company completed the sale of its LED business and formally changed its name to WolfSpeed. WolfSpeed is the global leader in silicon carbide technology, providing power and radio frequency RF semiconductors. WolfSpeed product families include silicon carbide materials, power switching devices, and RF devices targeted for applications such as electrical vehicles, fast charging inverters, power supplies, telecom, and military aerospace. Wolf is the only player in the industry with a fully commercialized, broad portfolio of field-tested SiC and GaN on SiC solutions on the market. While there's a great degree of complexity in IP in Wolf's design and solutions, what they do is simple. They make systems more efficient while reducing costs and increasing performance. The company has more than 60% market share in a market that is growing more than 25% CAGR and expected to continue until the end of the decade. Semiconductors made from silicon carbide are more expensive currently, but can operate at much higher voltages, temperatures, and frequencies than traditional semiconductors. SiC is lighter, smaller, and more efficient than traditional silicon. Wolf has tremendous momentum in its business across a growing number of mid and high powered applications. In the most recent quarter, the company won $3.5 billion of designs ins, which is a 6x last year, and the opportunity pipeline exceeds $40 billion. In April, Wolf opened the world's largest semiconductor fab for making SiC chips from 200mm wafers in Marcy in NY. The company announced in September that it will build a new state-of-the-art multi-billion-dollar materials manufacturing facility in North Carolina that would generate a 10x increase from WOLFSPEED's current SiC production capacity, supporting the company's long-term growth strategy, accelerating the adoption of SiC semiconductors across a wide array of end markets, and unlocking a new era of energy efficiency. Management. CEO/President. Greg Lowe joined the company in 2017 from Freescale Semiconductor, where he served as president and CEO. Freescale was acquired by NXP Semiconductors NV to form a $10+ billion mixed signal semiconductor industry leader. Greg was an executive of Texas Instruments, where he worked for 28 years prior to Freescale. CFO. Neil Reynolds joined the company in 2018 from NXP Semiconductors NV, where he served as SVP of Finance, Strategy, and Procurement. Prior to NXP, Neil was in management at General Electric. SVP and GM Materials. Kenzig Balkas joined the company in 2006 from Intrinsic Semiconductor Corporation, which he founded in 2002 and sold to Cree in 2006. He has more than 20 years of experience in the development and commercialization of SiC materials and semiconductors. Why this opportunity exists. There's a big chance occurring in the analog power semiconductor industry due to the adoption of silicon carbide. The driving range of an electric vehicle improves by 10% when using SiC in the traction converter versus silicon. As the market is transitioning to 200 million scale, the benefits of margin improvement should extend to the vertically integrated companies like Wolf, as they are the only ones with a 200 million IC fab in operation. The opportunity in EVs and 5G is not debated in the market. Capacity to meet the explosive demand is the missing piece to the puzzle. The company is spending around $1 billion in FY23 June on capex and then $700 million a year through FY26. Competitive landscape. WOLFSPEED dominates the SiC materials market and has over 30% of experience perfecting its SiC technology and IP. The company has over 412 materials patents, 1,200 power patents, and 1,300 RF patents. 1,300 RF patents. I'm sorry. Sentence end. Today, Wolf holds over 60% of global market share and over $1.3 billion in long-term wafer supply agreements. Materials currently represents 50% of Wolf's revenue, and in 2023, it's estimated that will fall to 40% as the company ramps up its higher margin devices segment. Strictly using its internal material, Wolf creates both power and RF devices. The company's leading share in materials and vertical integration in device development is the key differentiator and long-term competitive advantage. Several of Wolf's device competitors, including ST Micro, On Semi, and Infineon, use Wolf's material in the device production. The co-petition model creates some risk of potential disruption to Wolf if a large customer were to abruptly shift to internal sourcing of materials. However, the alternatives are limited, and these customers cannot reach their lofty goals without Wolf. The transition to 200 millimeter or 200 million wafer diameter and vertical integration are key competitive advantages for Wolf. The company's move to 200 million will showcase the company's lead in SiC, create an opportunity to grow share, and create a path for strong margin expansion. Moving to more device production is accomplished with the 200 million fab, and the payback period is estimated to be less than 4 years while creating a 5x multiplier to EBITDA. Risks. Number one, slower adoption of EVs could downside to estimate of sales per EBITDA. EVs are the largest near-term driven and are forecasted to grow 20% CAGR through the end of the decade. 2. Risks to ramp of a Mohawk Valley facility. The capex is critical to the bull case on Wolf, and any major issues or delays will cause the company to miss estimates. Wolf has been on track to ramp MV, and early customer qualification work has been taking place all year. Third, competition is intensifying as demand for SiC increases. Wolf's market share and expanding capacity should allow it to stay ahead of competitors while growing shares. Fourth, issues financing growth. The company could need more capital. Valuation. As the company ramps up a capacity to fulfill its growing backlog and transitions to more device sales from material sales, it should see more sales dollars fall to the bottom line. In FY 2023 June, revenues should be $1 billion, expanding to over $2 billion in FY 2025. JPM is estimating $2.5 billion in 2025. EBITDA will be $100 million in 2023 and reach over $525 million in 2025. JPM at 660 million. EPS of 13 cents in 2023 should expand to $2.75 in 2025. JPM $3.86 and reach close to $5 a share in FY26. In addition, in FY26, free cash flow should be around $2, but more than that probably. With the stock in the high 80s, it trades at less than 30x a conservative 2025 EPS estimate and 22x JPM's estimate. While this may seem expensive in this environment, it doesn't take into account the dominant and expanding market share in a fast growing industry where the spend is front end loaded and the revenue profits will follow with visibility as the dominant company scales. Applying a 30x multiple to a conservative EPS for FY26 of $5 to $7 share leads to a valuation of $150 to $200. Catalyst: more design wins, completion of fab, EV adoption. Thank you very much for tuning in.